Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about US retail sales, a data point or a data report that was just reported in the past couple of minutes, try to understand how it's impacting the markets. And of course, we'll be looking at a few other items on the economic calendar before we determine what are the likely progress or directions that the markets might take. So on the first part, we'll be looking at the economic calendar, and once we're done with this, then we do some technical analysis. So once you join in, kindly say hi on the live comment section, and this will confirm that everything is working just fine. So hello, J Squad, and thank you for joining the session. So let's get things started. And as usual, disclaimer that this session is purely educational, not financial advice, not a recommendation to trade. So you should always do your own due diligence. So this morning, we had news coming in from the Reserve Bank of Australia, where they had to make an interest rate decision, and they decided to hold interest rates steady at 4.35%, which was the expectation. So we didn't have much reaction from that. So the Reserve Bank of Australia has not yet achieved its target inflation rate, and in this case, the economic growth is still very slow at 0.1%, which means that they are likely to continue holding rates higher for longer. And the expectation is that unless inflation gets to the central bank target, then that's when they will consider cutting interest rates. But then also the central bank mentioned that they are not likely to go for any further rate hikes. So later on at 12 p.m., we had a new data point, and this was the European inflation report, which came out as expected at 2.6% year over year, and for core CPI, it was at 2.9%. So a key distinction between the two data points is that CPI is the overall measure of inflation, but then much more solid, or I would say smooth-end inflation measure tends to be the core CPI, which eliminates the impact from food and energy prices. So German ZEW economic sentiment survey showed some form of weakness at 47.5. So it was lower than the previous reading, lower than the expectation of 49.6, but slightly higher than the previous reading of 47.1. But still, we are in contraction territory. So whenever you see figures below 50.0, it basically means that it's still in contraction territory. So what this basically means is that there is a slight improvement in economic sentiment, but we are not expecting much of a progress unless we get to above 50.0. So there was no much impact. The major news with the impact today was the retail sales data. It came out at 3:30 p.m. So for retail sales in the US, there was a slight increase of 0.1%, which missed the expectations of 0.3%. But was an improvement from the previous reading of negative 0.2%. So for core retail sales, what we saw is a negative 0.1% contraction, meaning that the number is dropping, same as the previous month, and these missed the expectation of a positive 0.2%. So as we all know, increased retail sales tend to be positive for the currency as well as the equities market. But then what we are seeing here is a drop in retail sales. A big miss basically implies that we see a much weaker currency. And of course, the stock market doesn't respond kindly to weak retail sales. So retail sales, by definition, they are basically a measure of consumer purchasing power. So they basically track the receipts from major retailers, including supermarkets, clothing stores, and so on. And once you track this data month over month, you're able to see the trends in consumer purchasing power. So if there's more retail sales, it means that consumers have more purchasing power and they are willing to spend. And in that case, it shows their positive optimism into the economy. But then when you see this number falling, then you know things are likely bad. The economy is slowing down and it's not good news for the US. So going forward, for the rest of the day, we'll be looking at business inventories month over month at 5 p.m. And of course, the FOMC member Barkin will be presenting a speech still at 5 p.m. So we'll get an additional speech from FOMC member Kugler, and this will be at 8 p.m. So both news are not expected to have much of an impact. So the retail sales data may continue dominating the market during the New York session, which opens in a few minutes. So as of tomorrow, early in the morning at 9 a.m., we'll be getting the inflation report from the UK. The consumer price index year over year is expected to drop to 2%, down from the previous reading of 2.3%. And these will have achieved the central bank target of 2% if indeed it comes out at 2.0% or below. So if this so happens, it could have a much bigger impact on the decision by the Bank of England on Thursday at 2 p.m. The Bank of England is expected to make an interest rate decision at 2 p.m. this Thursday. So that will be a key focus tomorrow. So also it's important to mention that tomorrow is the Juneteenth. So the 19th of June is when the US celebrates Independence Day, not the 4th of July. The 4th of July is, of course, the Independence Day, but for Juneteenth, it's a celebration of independence, especially for the former slaves. So it basically celebrates the end of slavery in the US, and this is a public holiday for banks as well as for the stock market and the commodities markets. So the markets will be closed tomorrow. We don't expect much activity, but still the forex market will still be open, so you can still continue trading the US dollar. So that being said, among other highlights, if we check the news, we don't have any major news that have come up for the day. So I'll be showing you some of the key highlights for the day. So US retail sales rise less than expected. German investor morale improves less than expected. 10-year yield falls after retail sales. US futures steady after weak retail sales data. So Australia holds cash rate for fifth time. We already covered that. And cotton falls over 3.5-year low. Eurozone investor morale increases to 2-year high. So those are some of the key highlights in the market today. So looking at other things in the market, we will be looking at the issue of Broadcom, one of the top semiconductor stocks. So Broadcom hits fresh record high after stock split announcement. So the company basically announced a 10-to-1 share stock split. So we recently saw something similar with NVIDIA when it announced a 10-to-1 share split, where the shares were split 10-to-1, and the price dropped from $1,200 to around $121. And then since then, the prices have rallied to above 131. So the market was reacting positively to the stock. And now a second semiconductor stock going for the same stock split tends to be positive news for the market. So that will be on the forecast today. And of course, Broadcom shares are expected to open with a big increase later in the day. So if you check Broadcom year-to-date performance, the stock is up 68.50%. And of course, for the day, we're expecting the market to open up 1.32%. So besides that, don't know if there's any major highlights for the day. Just checking. So as I check this, if you have any questions, or comments, or responses, feel free to type that in the live comment section, and I'll be responding to that as we continue the session. All right. So without any further highlights in the markets, so I would like to jump straight into some technical analysis, try to understand what's currently happening in the markets. And once we cover these, hopefully everyone will be able to trade from an informed perspective. And hopefully this session will bring in some value for you guys. So immediately after the announcement of the news in the past couple of minutes, that was at 3:30, this is the reaction that we saw in the NASDAQ. So price basically made a big jump, formed a new all-time high, and immediately we had this reversal happening. So a new all-time high was just formed in the past couple of minutes, and now we can see NASDAQ taking a deep dive downwards. So this could determine the trend for the day for the NASDAQ traders. So we should be expecting to see some further downside in the NASDAQ shares, especially after the strong rally we saw after this major breakout happened on the 11th of June this month. So it's similar across board. So we are seeing also the Dow Jones making the same kind of price action. So after the big rally yesterday, the markets were basically trading sideways. a big jump to the resistance and immediately a drop. So you could be seeing the market extending the drop later in the session. And of course, for the SP500, there was no much spike. So notice the high that we saw here, and immediately price moved back downwards. So there's that potential that the market could potentially keep pulling back, but the sentiment overall is still bullish. So if you look at the daily chart, it's a very strong bullish momentum chart. So I wouldn't be overly optimistic on the shorts. So instead, I would probably be looking for bullish positions rather than short selling an index at an all-time high. So the trend has been pretty positive. So even though we are seeing the prices dropping this way, the idea is to be looking for more bullish momentum. So remember, it's still the election year, and we have been seeing the stock market being very bullish for the better part of the year. And of course, being led by semiconductor stocks as well as AI stocks. This huge drop from an all-time high is not that huge to warrant going short. So it makes more sense to be looking for bullish positions. And of course, you can already see that the momentum is already losing its strength. So some form of pullback at some point after the market opens may or might make sense to be looking for bullish positions in these equity indices. So besides that, of course, there's the currency market. In the currency market, we have seen the dollar index take a step backwards. So for the dollar weakening as a result of the weak retail sales data, it boils down to the Federal Reserve expectations. Remember, the Fed has been looking to slow down the economy, slow down the increase in prices. And now that we are seeing the retail sector basically responding to this, then there is increased chances that we could continue seeing the Fed now looking to cut interest rates. So based on the commentary from Fed Chair Jerome Powell, basically saying that rates might stay higher for longer until they achieve the inflation target, or they are confident that inflation is sustainably moving towards the 2% target, then the data-dependent approach is causing some of these news to have some significant impact on the dollar against other currencies. So today was pretty much bullish. So if you look at this, right from the open, the market dropped slightly before continuing with a strong rally for the better part of the first three sessions. That is the Sydney, Tokyo, and the London session. But now, as we approach the New York session, notice that the dollar has already erased all the gains it had made early in the morning. So from the opening price, we are back to square one. And now we are trying to determine whether the dollar will be continuing further downwards. And if that remains the case, then it may create opportunities in other currency pairs. So let's take the Euro USD, for example. So what we have been seeing is the Euro being pretty weak. So after the breakout here, we expected the market to retest this area, which it did yesterday, broke towards the upper side. And now it seems like a retest, which might lead to some more rally in the Euro against the dollar. So now we are seeing the market potentially moving upwards, backed by a much weaker dollar this afternoon after the retail sales report. So remember, the overall direction for this pair is still bearish. So for the better part of this month, the Euro has been losing to the dollar. So this is an attempt at recovery. So we are basically looking at the second day that the Euro is attempting to recover against the dollar. And with this big surprise movement upwards, I don't expect overall the Euro to be that strong against the dollar. So the target for the day might be this area here. So there's that potential that we see the Euro extend this short-term rally to around 1.07401. And once it gets here, then we start observing to see if there is signs of bearish entry, to see if markets are still questioning the narrative and betting on the Fed holding rates higher for longer and going for just one rate cut for the year, which would still be very positive for the dollar. So on the one hand, we have seen the dollar index being pretty strong. So if you look at the 1 hour chart and you look at the past week, it was just the dollar gaining against other currencies. And now after this big drop, we will be observing to see how long the dollar weakness might be sustained in the markets. So against the Swiss franc, we had a major breakout. So dollar making this breakout below the support area. So in this case, it seems like the Swiss franc is a pretty strong currency, and some further extension is expected. So the previous lows along this area here, that is around 0.87 414. So we might expect the market to extend this drop here. So after the breakout, in this case, a potential drop towards 0.7414 after that support was holding for a couple of days. So I would say there's several times that the market has found this support. Four to be specific. The fifth one, this is when we are having a break. I expect this to extend. So for the pound, it seems pretty strong against the dollar. But as we mentioned from the economic calendar, there is two major data points happening with the pound this week. One of them being the inflation report. We're expecting a drop to 2%. And of course, later in the week, on Thursday, we expect the Bank of England to be making an interest rate decision. So right now might not be the best time to be looking for a position in pound USD. So personally, I would think that the market is just holding and waiting until we get the reports from the Bank of England, both inflation as well as the interest rate decision. So in this case, if you look at the price action from yesterday, I wouldn't say there's much happening in these charts. So it's more of a sideways movement. And if you are to estimate the performance of the pound against the dollar this week, I would say it's pretty much sideways. We don't have a major trend happening in pound USD. So perhaps a continued dance along these two trend lines. Maybe the market going towards the upper one and then the lower one and so on. So if I was to insert an indicator here, not an indicator for a trading idea, but rather just to visualize the movements, then you notice the swings here. This is a 50-minute chart. So you can see the swings here, and now we are just on an upswing. And if I would be intraday trading, then I would be looking at potentially the market just getting to 1.27136, which is the high that we saw early this morning. So as for the USD card, I'll try and remove the previous buyers. Then we look at this chart from a very, I would say, simple perspective or objective perspective. And if you look at the price action for the last couple of days, it's more of a sideways momentum if we think about it this way. Market trading within a triangle, so oscillating up and down, but overall the price action is just a sideways momentum. So in this case, we are just moving from the upper swing and now towards the lower swing. And in this case, there's a good chance that the market keeps dropping. That is, the dollar keeps losing against the Canadian dollar, and perhaps even getting to the low of the day around 1.37126. So notice how these swings are almost predictable, and now we are seeing the price dropping to around this area. But of course, the real opportunities might emerge if the market, let's say, breaks the upper trend line, giving us an overall direction or the lower trend line. So the areas to observe are areas along this trend line here and areas along this trend line here to see whether there is an opportunity for a breakout. So in that case, we could have a proper position, but for this, it's just a swing up and down, whereas the overall direction seems to be sideways, and that's over the last 2 weeks. So Australian dollar seems to be holding on pretty well to this support area here. So you can see that this is an area that has been holding for quite a while now. And now we saw this happening yesterday. So we speculated that the market will bounce and get to this area. The target was hit. And now after breaking and pulling back, now we are seeing signs of continuation. So it means that there's a strong likelihood that the Australian dollar continues recovering against the US dollar. And of course, we have this trend line here holding on quite well. So potentially, we could be seeing this swing extending and getting to this upper trend line with exemption of the most recent swing here. So for the New Zealand dollar, we are seeing also another bounce from a major support area here. So this was the lowest price in the last swing as of the 7th of June. And now notice how the market has bounced pretty strongly. And now the target remains the highest price that we saw early in the morning. So it seems more likely that the market will continue pushing higher and potentially get to this area. And of course, as we all know, sometimes I'm right, sometimes I'm wrong. So you still have to do some further analysis to narrow down to a trading idea. So USDN, we speculated yesterday that it could get to the previous high here. So the market kept going up, but then weekend around midnight, So this morning, the rally was extended. We got very close to the target. So notice that the target was the previous high here. So market went all the way up, got to this area, and then pulled back downwards. So for USDN, I'm still very bullish. So notice the trend from last week and this week is following a path along this area here. So it's not a wonder seeing buyers coming in and pushing the prices back to the same area. So in this case, it seems like the dollar weakened during the news announcement, but it's about to be sent back to the sender. So 158.252. And as always, if you're trading USDN, be careful that the Bank of Japan or the Ministry of Finance in Japan could potentially go for a currency intervention, similar to what happened a few weeks ago when we saw the market making a big drop from 160, and within a few minutes, it dropped all the way down to a level around 154.5. So it also happened a second time to a level all the way down to here. This was 152.9. So in this case, yes, the market is still extremely bullish, but at some point we should be afraid that if the Bank of Japan intervenes, then that could cause massive losses if you're on the bullish side. So make sure to trade this with a tight stop. So silver is making some nice bounce after the announcement, despite having an overall bearish momentum for the better part of the day. So in this case, notice that the market has remained around this area for quite a while now. So if I was to clean up my chart here, it's very easy to observe that this was the trend line here. I'll call it the prevailing trend line with bearish momentum. And of course, we also have this trend line here, basically summarizing the price action of silver over the past couple of weeks. And the overall direction seems to have been taking this direction with the exemption of these attempts to break higher. So what we have seen over the last couple of days is now the market finding a high here, high here, high here, high here. But then if you look at the lows from last week, followed by yesterday and today, it seems like the lows are getting higher, or the market is basically thinning. So volatility seems to be weakening. And in such a case, it basically shows that the channel price action we have been seeing is weakening, and there's a likelihood that we start seeing silver prices bouncing from these levels and potentially breaking the upper trend line. So the idea is to trade or to identify a bullish position if the market breaks this trend line. But for now, it seems more likely that the sideways momentum might continue. And a potential target, if this momentum continues, is silver simply continuing this bounce and getting to around 29.57. So for gold, I need to find it. Yeah. So here's gold. Sorry, my chart had moved. So it's a similar thing with silver. So there seems to be some very strong correlation between the two. So gold found some nice support along this area here. So this is what we're experiencing here. And of course, the overall momentum since the big drop here, and the big drop I'm referring to this momentum here, happened about 2 weeks ago. It seems like gold is still in a consolidation mode and hasn't yet formed a major trend. So in this consolidation, we are seeing the swings up, down, and now with this bounce falling squarely on the support area, then it makes more sense that gold might be bouncing and heading higher. So on a shorter time frame, in this case the 15 minutes chart, you notice that there is a certain level that the market seems to be finding some form of resistance here. Yesterday in the afternoon, today in the morning, and now the market having bounced from this trend line might be headed to the same level again. This is around 23.26. So it's still in consolidation. We don't have like a major straightforward move. So we could be seeing gold extending this rally to this area here. But for now, it doesn't make a lot of sense. So it's more of a wait and see. I wouldn't say that this can be ignored. Notice that it was the high yesterday, on Friday, high yesterday and high today, forming the basis of this trend line. So yes, there's a lot of consolidation happening with gold. A potential break will potentially emerge, but for now, we don't have a major move. So with all the news coming up this week, especially the interest rate decision by the Bank of England, then in that case, we could be having some big momentum. But for now, it's still a consolidation phase. And to put this in perspective, we have seen gold do the same thing over and over again. So notice, like for instance, there was this period when gold was doing this. Then we had this, and eventually the breakout happened towards the upper side before the market made a big drop. So you want to capitalize on these big momentum days and be off the market when there is all this noise. So at some point the move will come. So let's just be patient and wait for that to happen. So for now, it's unless you're scalping, I wouldn't be overall optimistic about the current momentum or price action in gold, especially after seeing this kind of price action this week, Monday and then Tuesday. So at some point you'll get that break and capitalize on the momentum. So as I mentioned earlier, US equities, after the big drop, you can already see buyers coming in and attempting to move for further all-time highs, but that hasn't happened yet. So today, it's more of a sideways momentum. So let's wait for the big break, maybe at the New York Open. Of course, for the NASDAQ, yes, you can see there's an attempt to move back downwards, but we are still within this phase where the market has these cycle highs and lows, but no big breakout yet. So it's the same thing. The Dow is also recovering. This is what we are seeing here. So this area, we're also seeing this area. So market is technically moving sideways today. We don't have a major direction. I wouldn't say that this is the direction the market is taking strongly. I would say that we are still seeing sideways momentum, and a potential break might present an opportunity, but it hasn't happened yet. So Bitcoin has been bearish after breaking this consolidation here. So we covered this over the last couple of weeks. This is 4 weeks of range and then a breakout towards the lower side. So we expected the market to continue dropping to around $64,000, already hit a low of 64,568. But if you notice, they are wearing orange or yellow. And the more you see this bearish momentum happening in Bitcoin, the better the opportunity to capitalize on the buy. So we have seen these cycles happen over and over again. Bitcoin varies and gets to around 70, 71K, and then eventually makes a drop. So when this happens, we know that eventually we have seen the market make a strong recovery. So in this case, this is what we are seeing with Bitcoin. So if you're trading intra-session, it seems more likely that Bitcoin will continue with the bearish momentum. But then beware that buyers are accumulating more at even lower prices. So expect the bounce to be pretty strong. So for now, for intraday trading, there's that expectation that price keeps dipping, and the next available price action level is around 63 or $64,000. So this 63,964 is just close by. So $64,000 seems like a nice target for intraday trading, but overall, long term, we are looking at a strong bounce towards the upper trend line. Of course, the idea is to capitalize on a big move towards the upper side. So that's the underlying idea, but for the short term, it seems more likely that the price keeps dipping. So on European equity indices, the Spanish that 5 IBEX managed to hit a high here and then drop to the previous low. And today, since last afternoon, we are seeing the opposite happening. So now price is making yet another swing, but in this case, towards the upper side. Of course, the target is still the same. 11,107, which was the previous low, now turned into a resistance. I expect to see this recovery happening across board for major European equities. So in this case, also for the Euro Stocks 50, similar thing, market going for this pullback to retest this area here. So 4,940 seems like a nice target. The French 40 index dropped slightly yesterday, as expected. Of course, didn't get to the previous low, and now we are looking at an extension of this recovery back to 7,703. So from the forward chart, this is how it looks like, and the basis for this line is based on some past prices that were acting as resistance, and now it could be the next resistance as the stock market looks to recover. So for the FTSE UK 100 index, this morning we had the market rejecting higher prices on the upper trend line. We expected further momentum downwards. It hasn't happened yet. So across board, we are seeing European equities recovering. So in this case, I would narrow the idea to this area here to see if there's a potential breakout happening. So the idea of the market dropping further towards the lower side seems to be dying out. And now the idea in play here seems more likely of a breakout. And if that breakout happens, then in this case, we should be expecting to see higher prices. Of course, normally in a bearish momentum trade, you expect to see the market forming lower highs as it has been doing, as well as lower lows, but then the lows are beginning to get higher. So if you've been observing the lower side of this chart, from this low here to this other low here, so Friday's low, Monday's low, and then today's low, it seems like the market is unable to form lower lows, which is a sign of weakness in the bearish momentum. In this case, a potential break could bring up the idea of going for a bullish position if it actually plays out. So the German 40 or the DAX, sorry, the German 30, I know there's an error in the naming. So we are seeing the market for European equities being pretty decent, attempting to make a recovery from last week's sell-off. Of course, the target area for a retest is all the way up to this area here. So just highlight this. So this was the breakout point. And now after the market traded lower, we are seeing recovery yesterday. And today, potentially, we could be seeing some further recovery. And the idea is that the market makes a climb along what I would describe as a wall of worry until it gets to a previous high, previous low, marked as a resistance in line with other European equity indices as they continue trending higher. So that's it for the day. Don't know if there's anything I have missed. Brent oil seems to be pretty bullish, same as US oil. So we normally analyze Brent oil with the idea that the correlation is pretty strong. So we saw the swing here captured as the market went down, and now we have seen the market struggle to make this climb. It's almost getting to the target. Notice where the trend line lies. So in this case, with Brent oil up over 3% this month, we are seeing this recovery continuing. And of course, the price action for today was a pullback to retest this area here and then a continuation. So notice how this resistance was holding strongly last week. Yesterday, there was a clean break. Today, a retest and a continuation. Of course, we expect price to extend this further upwards. So we could be seeing a key level price action area being retested today. This is around $84.634 per barrel. So in this case, strong momentum towards this area is expected during the New York session. So now looking at the comment section, trying to understand what's happening. Let's get to it. Hello, Charlie Genius, and thank you for the comment. Comment is in Swahili. Gold has done ile kitu, which basically means gold has done that thing. So strong bounce, and of course, if you go to the 5 minutes chart, it's quite volatile right now, especially as we look at the New York Open. But the idea is that the price keeps extending this bullish bounce. So from the 1 hour chart, that's how it looks like. 4 hour chart, also market attempting to bounce from this area. Daily chart, I will remove all this noise. And you can see that it's a clear bullish momentum followed by some nice pullback. So from the 4 hour chart, if I zoom out, you notice that gold is basically attempting to bounce from this area and potentially move higher. But then from a smaller time frame, in this case, the 1 hour chart, then the idea is that the highs have been getting lower, but the lows have been getting higher, indicating some form of consolidation along this area here. So gold is still in a triangle, a consolidation area, and we expect to see at least some more momentum upwards. So an idea that could play out during the New York session. So hello, Owen, Wangari Patrick, the ambient Ted. Thanks, guys, for joining. So a good question, why is Bitcoin dumping? Well, a rate cut is a welcome news. From what we have heard from the Fed, no rate cut is coming. From what we heard from Fed's Kashkari on Sunday, it's a potentially just one rate cut happening in December of 25 basis points. So it basically means that the Fed is looking at keeping rates higher for longer, and in that case, are not good for the stock market or Bitcoin. But the stock market seems to be doing pretty well, backed by AI and microchip stocks. So Bitcoin is taking a step backwards, but the idea is that the bullish momentum continues. So the temporary pullback is nothing but normal. So we should be expecting a strong bounce from the current pullback. So a good question from J Squared again. Will the FOMC speeches from Bakin and Kugler have an impact on the markets if they turn hawkish? So the idea of these speeches, from an investor perspective, you're trying to estimate what the overall picture of the Fed members is. So in this case, it's not about one person mentioning that they are bullish or bearish, hawkish or dovish. So it's about building an overall picture of where these guys might direct their votes. So investors will track several members and see whether they are in for holding rates higher for longer or whether they are in for cutting rates. So as for the previous FOMC meeting, which happened about 2 weeks ago, it was a very clear message. I think it was a week ago. And the clear message was pretty simple, that inflation has remained significantly high and the Fed may have to hold rates higher for longer. So if you see some changes from these Fed members going for, let's say, a pro-rate cut approach, then that could have an impact. But then if they maintain the same speeches, then we expect that the votes for the next meeting will remain the same. And as a result, we continue seeing a strong dollar. So it's only a big U-turn looking into cutting rates that would impact the markets. But if that doesn't happen, then the overall strength of the dollar is expected to be seen in the markets. So from Wangari Patrick, is there any need for Bank of Japan to make an intervention? Yes. Their import prices have been largely affected by the weak yen, and they're looking to stem that by basically intervening in the currency market. So the yen hitting multi-decade highs of 160 was unprecedented for them, and they don't want to see this happening in their economy. So at some point, we expect the Bank of Japan to intervene. So in this case, be very careful, especially when you're trading the yen pairs. So the overall idea is that interest rates are still significantly low in Japan. Quantitative easing is still continuing, which weakens the currency. So as a result, investors continue betting against the yen with one foot in, knowing that the Bank of Japan could come in at any time. So one of the key ideas is when the American banks are closed on June 10th. So there's a good chance that the Bank of Japan could intervene tomorrow when the US banks are closed. And this is only my speculation. There's no news saying this. There's no, I would say, major analysts saying this will happen. But based on my experience in these currency markets, I know the Bank of Japan could pull one on us tomorrow. So just be on the lookout. Why is it important to check the opening of the day? The daily bias, the answer to your question is the daily bias. So for a lot of us Forex traders, we try to build some really good strategies but fail on the daily bias. So by analyzing the opening, close, high and low of the day, we try to establish the daily bias. And once we understand that a certain market is moving in a certain direction, by directing your trades in that direction, it gives you an edge in the markets. So for instance, I've shown you the bias of the European equity indices, and it's very clear that these indices are making a recovery this week. So as a result of that bias, then the overall expectation is that you are more likely to make money going for bullish positions compared to bearish positions. So it's 4:30 p.m. and you've mentioned twice waiting for the New York Open. Is it already open? Yes, it's already open. We should be seeing stocks trading at around 4:45. So just check your charts in the next 2 minutes, and you should be seeing activity on on US equities. What's the name of the zigzag indicator that you apply, kindly? It's the zigzag color. There's two indicators. You can check them out. I think mine is custom. So just go to custom and then scroll until you find the zigzag or the zigzag color. So they both do the same thing. So the only difference is that the other colored indicator will have a different color for an upswing and a different color for a downswing. So just the zigzag color is one color, and if I do indicators, I go to custom and then find the zigzag, then you'll notice that there's a difference in color. So when I apply this one, the moves towards the upper side are blue, the ones towards the lower side are red. They basically help you to plot your trend lines. So if you're just learning how to plot trend lines, the zigzag indicator will help you identify the swing highs, the swing lows, and when you draw your trend lines, you're able to identify the potential momentum. So checking to see why do normal price retrace before the start of another session? Remember, this is a banking thing. So when we talk about a session, it's basically when the banks in a certain region are open and when they are closing. So normally, when you see, let's say, banks from the Asian session closing, they will probably be doing some activity, either buying or selling a certain asset. And in that case, you might see some profit taking and trends halting for a period before continuing or making a reversal in the next session. What's there behind you? It's basically a copy of the Bitcoin white paper. So if you know it, then you understand it. You can check it out when you want. Thank you very much, guys. Thank you for your time. I appreciate your responses, everyone in the space. So remember, if you'd like to begin trading, there's a course available on FX Pesa YouTube, Novice to Pro course to help you understand what Forex trading is and all these terminologies that we use in these sessions. Remember, we have daily sessions happening from Monday to Friday at exactly 11 a.m. They are live on YouTube as well as on X. Remember to follow the FX Pesa handle so that you can know whenever these are live sessions. And of course, if you'd like to register for an account, check the link in the description below. That's on YouTube. And of course, if you're on X, just go to the FX Pesa handle. You'll find the link and register for an account, which is free and online. So thank you very much, guys. Thank you for your time. I hope to see you on the next session.